Hello everyone, I am Pratap here. We are at lesson 29.2. We are in the series how to use NeoStock Software Generated Different Supply Demand Zone Reports. So in this series, now we are going to focus on daily income trade, bullish and bearish trade setup supply demand zone reports generated by the NeoStock software. How to use them, that is what you will be learning in this video. How effectively you should make use of the daily income trade, bullish and bearish trade setup reports. And this video lesson is having dependency on your free training video course. In case if you are directly accessing this video without completing our training lessons, you must understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over $8,000, but we are providing complete free training. So at our NeoStock homepage, you just click on playlists. We have different playlists here, and one of these playlists are supply demand zone price action course. You have supply demand zone price action course. In this playlist, you click on view full playlist. Just click on that. Now we are getting all the training lessons. And you need to start your training from lesson 1.1. And that is available, all the lessons are available from the bottom of the playlist. So start your training from lesson 1.1. All the training lessons are placed in an order. So go through them one by one. So you must complete all the training lessons until lesson 20. Because bullish and bearish trade setup concepts are explained in all these lessons. And especially the second phase of this training, starting from lesson 11, that talks about multi-time frames. So here we discussed different income trades in these videos. Especially lesson 15, I have explained different income trades. See here. And before that you land up the decision making tables related to bullish trade setup and bearish trade setup. And these concepts we have incorporated in our software. By making use of these concepts, our software generates the bullish and bearish trade setups for different income trades. So one of these income trades is daily income trade. And this daily income trade reports, how to use, I am going to explain in this video. And also apart from completing your training lessons until lesson 20, the last lesson is this is the end of the phase 2 training program. So by completing lesson 20, you will be in a position to make use of bullish and bearish trade setups for different income trades like monthly income trade, weekly income trade, daily income trade or hourly income trade. You can make use of those concepts and you can plan your trades. But apart from these concepts, I have also explained strategies in third phase of the training. I've been explaining different strategies in the third phase of our training starting from lesson 21. Lesson 21, I talked about HLQ zone strategy that I developed by using daily and 75 minutes high liquidity zones. That is what you learned in lesson 29.1 video. Lesson 29.1, we have 2 videos are available. First video, we generated high liquidity zones with the help of NeoStock software. Daily and 75 minutes high liquidity zones, and we analyzed them. Second part of the video, their performance also we evaluated. Now we are in the third video. This third video is having dependency on lesson 23. See here, lesson 23 is about how to understand bullish and bearish trade setups for our trading point of view. And it is also having dependency on lesson 24 zone confluence strategy, because we are mixing these strategies together with bullish and bearish trade setup and generating high probability trade setup zones. What is this high probability trade setup zone? That I will explain. But before that, those strategies, the high probability strategies, by making use of lesson 23, lesson 24 concepts and EMA concept you learned in phase 2 training, that is I think lesson 17 you learned EMA confluence. All the concepts together we build advanced strategies to improve the probability of getting success. And those strategies I have explained in lesson 27. That means lesson 23, lesson 24 and lesson 27. All the 3 lessons you must complete. Then only you will be making use of NeoStock software generated reports. Without completing those lessons, if you are directly planning to take the trades, sometimes you will be making mistakes. That's why the prerequisite is you must complete your training course until lesson 20. After that, for bullish and bearish trade setups point of view, you should complete lesson 23, lesson 24 and lesson 27. It is essential. Without completing these lessons, don't use the bullish and bearish trade setups generated by the NeoStock software. If you are using, you may not be using effectively. So I am talking effective usage of our software reports, I am telling. So that's why it is essential. Now let's get into the how to use a NeoStock software generated. First, I will generate bullish trade setup for daily income trade, because currently we are focusing on bullish and bearish trade setups for daily income trade. You already learned in your phase 2 training program in daily income trade, higher time frame is daily, intermediate time frame is 75 minutes and a lower time frame, that is entry time frame, is 15 minutes. So hope you all remember those concepts. So that's why entry time frame I am selecting 15 minutes. That means I am telling the software generate the trade setups related to daily income trade, because in daily income trade entry time frame is 15 minutes. Because you are using bullish trade setup, you have to tell the software we have to depend on the demand zone related filters we have to use while generating the software. And most important thing is, in this bullish or bearish trade setup parameter, at 15 minutes, this is the entry time frame. Now you have to tell your software, I am using my entry time frame as 15 minutes. For 15 minutes, 2 setups you can generate. One is bullish trade setup and another one is bearish trade setup. So currently we are generating bullish trade setup. So you have to inform the software, generate bullish trade setup for 15 minutes time frame. That means entry time frame 15 minutes. That is nothing but daily income trade. So that's why it is a DIT trade setup. Okay, but these 15 minutes demand zones should not be pierced, because in bullish or bearish trade setups we don't use pierced zones. Pierced zones, we have a separate strategy that I explained in lesson 29. At present we are focusing on bullish and bearish trade setups. That's why your entry zone should not be pierced. So that you have to tell the software, I don't want pierced zones. So scroll down, here you have a pierced count parameter. See this? It is a pierced count parameter. What is your entry time frame? 15 minutes. So that's why in the 15 minutes, you don't want 15 minutes demand zones, pierced demand zones you don't want. That means your zone should not be pierced demand zone. So that's why I am giving minimum value 0, maximum value 0. What does it mean? If you set minimum maximum value 0 means your pierced count should be 0. Pierced count 0 means zone is not pierced. Okay, these values we set. And also, do you remember the checklist that I explained in lesson 20? What is it you learned in the checklist? Let me quickly show you that presentation. This is lesson 20. Different checklist items. See the first checklist item. Your base candle count should always be less than or equals to 6. Our software by default will take care of this. It will not display any zones having zone count greater than 6. So that is the beauty of our software. So no issues with this. We need not check because software automatically filters them. Okay, what is the second checklist item? The strength of the zone leg out should not be sluggish. If it is a sluggish, the zone you have to. And this you will identify once you draw the zone. I did not include filtering the sluggish zones in our software. There is a reason. The reason is we have HLQ zones, high liquidity zones. High liquidity zones work even if the zone leg out is sluggish. It works. That is the beauty of high liquidity zone strategy. So I don't want to filter the stocks. This is the reason why software I did not include that. Otherwise the sluggish zones will be eliminated and any high liquidity zones we will be missing those trades. Especially high liquidity zone strategy that you learned in the previous lesson. Okay, so you can once you draw the zones on the chart, you can identify. If the leg out is sluggish in your zone, just ignore that zone. Don't plan the trade. That is what? Reject the trade. But HLQ zone strategy, we don't bother whether it is sluggish. Any kind of zone, we will be planning our trades. We need to have fine-tuned 5 minutes order flows. That's it. Okay, next checklist item 3. What is that you learned? Is the entry zones zone achievement should be violated opposing zone or not? If it is not having achievement, reject the trade. So that means we must have zone achievement as a violated opposing zone. So that is the reason why while generating the report itself, see here we have a zone achievement. Here I am selecting VOZ. That means violating opposing zone. Only those VOZ supported zones only we have to filter. You are telling the software. What you are telling? My zone should be violated opposing zone. That zone achievement should be there. Otherwise, I don't want the stocks. But you have demand zones and supply zones both. To which zone this filter should be applied? So here, that's why you selected entry zone as a demand zone. This filter should be applied to demand zone. Earlier you selected PR should count 0. That filter also applied to the 15 minutes demand zones. Okay, fine. We set the filter. That means our software itself is going to filter the stocks because we set that parameter. Okay, what is the checklist item 4? Is the zone having a fresh fine-tuned 5-minute zone? Why we need to check this? Do you want to take trade in these fine-tuned 5-minute zones? No, we don't take trades in fine-tuned 5-minute zones. Only intraday traders only will take trades in the fine-tuned 5-minute zone. If that is not the case, why we are testing this? I already explained in lesson 20. What is that I explained? The fresh fine-tuned 5-minute zone we are checking because if a zone is not having a fresh fine-tuned 5-minute zone or even high liquidity zone is also okay. Because I didn't tell that point in lesson 20 because at the time you didn't learn high liquidity zone concepts. That is lesson 21 is not completed before lesson 20. So now you can also consider high liquidity zone is also there. You can plan your trades, 5 minutes zones. But mainly the fresh fine-tuned 5-minute zone, why we are looking for? If it is not there, there are higher chances zone will be violated. That is what you learned in lesson 16. The second video in lesson 16, you learned when a zone will be violated. At least 80% chances are there for the zone violation. I told you If a zone is not having a fresh fine-tuned 5-minute zone, there are higher chances the zone will be violated. Suppose if the zone is having higher chances to violate, do you want to take a trade in that zone? No. That's why we want to reject that. That's why I added this as part of our checklist. Please remember, fine-tuned 5-minute zones is not for taking the entry. Fine-tuned 5-minute zone you will use only for intraday trading point of view. See HLQ zone strategy, the daily and 75 minutes HLQ zone strategy that you learned in the previous video, or I explained the strategy in lesson 21.3 video, the third video in lesson 21. So their fine-tuned 5-minute zones are required to plan your trade in that zone. But bullish and bearish trade setups, especially DIT, WIT or MIT, in any of these income trades, you may not be taking trades in the fine-tuned 5-minute zones. You take a little earlier, even before reaching fine-tuned 5-minute zone, you may take the trade. Why? Because the trend is, you are trading in favor of the trend. Because you are trading in the favor of the trend, sometimes, or not sometimes, many times, prices may not be reaching up to the fine-tuned 5-minute zone. Before reaching fine-tuned 5-minute zone, again prices will be started moving up if it is a demand zone, or moving down if it is a supply zone. Before reaching fine-tuned 5-minute zone. If that is the case, you will be missing the trade. Intraday you can't avoid. Why we are looking for fine-tuned 5-minute zones in the intraday? Risk management point of view. Because intraday we should be very strict about the risk point of view. If it is DIT, if even the risk is higher, still you can manage your trades by doing position sizing. Of course, intraday also you can do. But the problem is achieving the RR is also another problem. All these things we will see while I'm explaining the charts. But remember, this is a very important slide. If a fresh fine-tuned 5-minute zone is not there, there are higher chances the zone might be violated. Many of you are ignoring this point, directly taking the trade. Finally, your trade will be stopped out and you will be having a question mark why the zone is violated. Okay, it's a very important. Next, checklist item 5. This you have to do manually on your charts. Software don't filter this. We have to analyze the chart. Next, checklist item 5. Risk reward should minimum 1:3 should be there. When at the time of your trade execution, before your trade execution, you must make sure the RR should be minimum 1:3 RR. Wherever you are planning your entry, whichever the level inside the zone, or exactly at the proximal, or type 2 proximal, or type 3 proximal, or fine-tuned zone you are taking inside the zone. That is all different strategies how you can take the trade to minimize your risk. You are already learned those points in phase 2 training. So from your entry till your target zone, minimum 1:3 RR should be there. Otherwise you have to reject. So this also manually you need to identify. Why manually we need to identify? Software is already identifying, it is checking minimum 1:3 RR is there or not. But software is checking based on type 2 proximal entry of the zone. It won't fine-tune software. But sometimes you may want to further reduce the risk. So that is the reason why you must manually do. We will see. Once I explain the charts, I will give you more explanation about this. And the next one is checklist item 6. Is the maximum acceptance risk, is it within the 2% of the trade capital, with or without position sizing? If you can able to do position sizing, even after doing position sizing, if you are not getting the 2% risk, if the risk is beyond 2%, you have to reject. If the risk is within 2% level, you can accept. That is what you learned in your phase 2 training lessons. Maybe lesson 18 or 19, one of these lessons, you learned about it. So this is compulsory. You should not take any trade beyond 2%. And the next checklist item is does our trade supports one of the conditions in the decision making table? Decision making table you learned in lesson 14. We have two videos in lesson 14. One decision making table is one video it is a bullish trade setup decision making. Second video bearish trade setup decision making. And these rules are incorporated in our software. Software will check all the decision making rules. What kind of rules you learned? You learned about trend, you learned about price direction. The two types of price direction, ITF price direction and HTF price direction. And you also learned curve, low on the curve, equilibrium or high on the curve. You learned the location, that is nothing but curve. All those rules are explained in the decision making table. And the entire decision making table was automated, and the software automatically take care, so that you need not worry about that. Because decision making table rules, if you want to verify, at least you need to spend, for each stock maybe you need to spend maybe 5 to 10 minutes time. Now you can save that time. We can trust our software. Software is taking care of all those rules. Okay. And the last checklist item is the entry zone odd enhanced score is greater than or equals to 12. For a bullish or bearish trade setup, the score should be greater than or equals to 12. So you need to check. And this value we can set while before filtering the stock. See here, you are having a minimum odd enhanced score. Min OE score means minimum odd enhanced score. What should be the minimum value? 12. So set the value 12. So some of the checklist items are taking care in the existing software algorithms, and some of the checklist items you are adding while filtering the stocks. See, two checklist items we have added here. One is zone achievement and another one is minimum odd enhanced score. Other checklist items like base candle count less than or equals to 6, and our decision making rules, all these things existing algorithm, software algorithm itself internally taking care of them. And the remaining things, three things we should take care. What are the three things we should take care? One is the RR. Minimum 1:3 RR should be there. That you have to take care. Second thing is fine-tuned 5-minute zone should be there. And third one, what is the third one? Even I forgot, sorry. Third one is, the 2% RR. This is the one, checklist item 6. Your risk should not exceed 2%. Those things while drawing the zones you will take care. Okay. Now we set these filters. Now the filters are applied to 15 minutes demand zone. Now I am filtering the stocks. See, we got 4 stocks. Currently these 4 stocks are supporting bullish trade setup for daily income trade. See here, the time frame is 15 minutes, entry time frame. Which zone are you using? Demand zone. What kind of trade setup you are using on 15 minutes time frame? Bullish trade setup. What is the odd enhanced score minimum? Greater than or equals to 12. What is the zone achievement? Violated opposing zone. And our 15 minute zone should not be pierced. Which zone? Demand zone. Because we selected our zone as a demand zone. So filters will be applied to the demand zone. So that's why always you can look into the search strategy. If any mistakes you made while setting these settings, you can find them here. Any mistake you can find here. Any wrong value is selected, you can find here. Okay, once this, because every time you have to look into this. You have to cross check all these parameters, because sometimes while generating even I may make mistake. Once everything is perfect, then you should focus on these stocks. Okay, in these stocks I am providing, these are all the 15 entry time frame 15 minutes. These are the 15 minutes zones. Because it is a bullish trade setup, your entry is on the demand zone and your target is supply zone in all these 4 stocks. What you have to do? Very simple. Just go to your trading view. Okay, 15 minutes time frame we have to use, because all these zones are 15 minute zones. Let me delete this. Okay, all these zones are 15 minute zones. So first one is RT Industries. So here just type RT Industries. Always select the equity charts. Don't select futures charts. Futures charts data is not valid, not accurate for supply demand zones point of view. You have to analyze equity charts. When prices are about to enter the equity price, whatever price is there in the futures, with that price you take your trade. Similarly, when prices are reaching the target, whatever price is there in the equity futures price at the time of reaching equity target, just exit your trade. That's it. That is what you have to do. Okay, now RT Industries previously drawn zones were gone. Removed it. Okay. Now what is our demand zone? Leg-in. Look into the leg-in date. On 22nd January 2025 at 14 hours. You have a leg-in, after that one base candle. 22nd January. January, 14 hours. This is the one. This is the leg-in. You have a base candle, you have a rally and follow through candles. Okay, while drawing this zone, you observe whether this zone is sluggish or not. It is not sluggish. Follow through candles are there, right? So easily you can select this stock. You need not reject this stock. So this is a demand zone. This is a 15 minutes demand zone, because there is no 15 minutes. Let me give color what I am giving for 75 minutes demand zone. Okay, fine. Remember, this is a 15 minutes demand zone. Rally, base, rally. But what is your target? Your target zone, supply zone. What is our target supply zone here? 24/1/2025. 13 hours after that 5 base candles are there. 24th January, 13 hours, 5 base candles. 24th January, drop, base, drop. So this is our target. Okay. So what is that you feel? Okay, when price here, I will take an entry, and then when price come here, I will exit. This is how you may feel, but that is wrong. You should not think like that. This 15-minute zone should have a fine-tuned 5-minute zone. Then only you should plan your trade. Otherwise, there are higher chances this zone will be violated. We should have always fine-tuned 5-minute zones, whatever the time frame. That is for confirmation that the zone is having institutional order flows. If a zone is not having institutional order flows, what will happen? The zone will be violated. But remember, You cannot go for directly 5 minutes zones. You should look for fine-tuned 5 minute zones. Of course, 15 minutes directly inside you will be looking for 5 minute zone. But 75 minutes, what is the meaning of, suppose your zone is, entry zone is 75 minutes. What is the meaning of fine-tuned 5 minute zone? Inside 75 minutes, we should have a 15 minute zone. Inside 15, we should have 5 minute zone. That is, we call it as a fine-tuned 5 minute zone. All the time frames you have to look for fine-tuned 5 minute zone. And those fine-tuned 5 minute zones indicates a strong institutional order flows. So for that, what we have to do? We need to go to the 5 minutes time frame. Is it having a fine-tuned 5 minute zone? Yes. It is having a rally candle, base candle and a rally candle. And moreover, fine-tuned 5 minute zone is there at the proximal line of the 15 minute zone. This is the type 1 proximal. At type 1 proximal itself, we have rally, base, rally. This is the medium size leg candle. This is a large candle. That way you can understand. So now you draw the demand zone here. See this 15 minute zone. If you convince this is also a rally candle, then you can draw a rally, base, rally. One more fine-tuned 5 minute zone you can draw. See, this is a small candle. Rally, base, rally. Because this candle looks like maybe this is a little bigger than medium size. Maybe it could be a rally candle. If you are having any doubt, maybe this is smaller than you were expected. Any doubt you have, you just ignore it. That's it. Look for some other stock. Okay, I am convinced maybe this is also a rally candle. This is a small size candle, medium size. Actually, all these are all a little bigger than these base candles. But anyway, whatever it is, our interest is only inside this. So now we have 2 5 minutes order flows inside this zone. So excellent. If more order flows are there, this zone may get more higher success rate. Okay. Now the question is, can we plan our trade here? Yes, you can plan. But what are the rules? Risk point of view. What is the risk? So the risk is, if you are considering this entire 15 minute zone, let's go to the 15 minutes time frame now. How you are planning your trade. If you want to consider this entire risk, calculate how much risk this is having. How do you calculate? Very simple. So this is your entry is, let us assume 434.50 and here 433.75. No, 433. It is showing 422. 32, I mean 432. Okay. 432, 434. So let's open the calculator. $434.50 minus 432, 2.5. But you will be adding stop buffer, right? So definitely you will add some stop buffer. Let us assume approximately my stop. Now randomly I am calculating, but generally you will look into the report to find the stop buffers. For example, if you want to look into RT Industries stop buffer, here in our software, we have an option to generate stop buffers. What is the stop buffer for RT Industries? Where is that RT? A, right? Yeah, RT Industries. Which time frame are you selecting? We are selecting 15 minutes. 5 minutes 3% ATR, 15 minutes 5% ATR. So you need to look into the 5% ATR value. So 0.77. This is our existing risk without stop buffer. If you add stop buffer, the round value we have to use. Maybe 0.80 plus 0.8. So you are handling 3 rupee 30 paisa risk you are handling. ₹3.30 risk. So let me draw the stop buffer. Now what you have to do? You have to draw the stop buffer. So what was my 432 was 432 was our distal line. 432 minus 0.8. This is our stop loss. 431.20 is your stop loss. Let me draw a horizontal line. $431.20. 431.25. Okay, 431.20. I adjusted the value. So this should be your stop buffer. Let us assume this is your entry. If this is your entry, and this is your stop buffer, what could be the risk now? What was the risk earlier we calculated? 3.3 was our risk. Okay, 3.3 could be, what could be your risk? Suppose if you want to, because it is a short term trading, if you want to take a one future slot, what could be the risk? So let's go to the margin calculator, the margin calculator, and our stock is RT Industries. Let's add. Now they are not showing, but anyway, maybe this is the midnight. I think they don't show the data. Let me try again. They are not showing. What I do? Let me look for margin calculator. Angel 1. Angel broking, yeah, their margin calculator I am selecting. So stock exchange, NFO, Nifty, futures and options. So I'm selecting futures, and symbol is RT Industries. RT Industries, January futures I am selecting. So what is the net quantity? For one future it is 1000. What we are going for? Long trade, buy trade. Okay, what is the cost? Approximately it is 1,48,000 for the current price. By the time prices are entering into our zone, this value will be reduced. Why this value will be reduced? Because the value is above our entry zone. It is at present. By the time they come here, somewhat the price will be reduced. Approximately we will calculate. Okay, so 3.3 into 1000, the lot size is 1000. So you need to face 3,300 rupees risk. But the 3,300 is it within our accepted risk 2% level? That is what the checklist item we have seen. The maximum accepted risk should be within 2% of our trade capital. So what is our trade capital? Our trade capital is 1,49,138. Maybe it will be reduced a little bit. Approximately I can say by the time it will come down, maybe another 500 rupees or 600 rupees, definitely the current value will go down. So approximately I am calculating rough value. So 3,300 into 100 divided by, say, let us say it is going to be 1,48,000, maybe less than some 500 roughly, or 400 around. So let us say by the time prices reach the demand zone, its value may reduce to 1,47,000, maybe 700 rupees or 600 rupees. 1,48,600. Rough value I am calculating. You are getting 2.2% risk. Because you are getting 2.2%, it is beyond your 2% accepted level, you can't take the trade. So what is the options I have? I have confidence that this zone, let us assume. Remember, this is not my statement, just assumption. What is the assumption? Let us assume you are believing this stock will give very good result. You should not miss it. So how do you plan your trade? You need to take a little inside. That is one option. Or you have to make sure, rather than depending on the entire order flow, the fine-tuned 5 minutes order flow you want to depend. This is our fine-tuned 5 minutes zone. Earlier we have our fine-tuned 5 minutes zone up to this. Here itself we want to exit. So 5 minutes level entry we are taking, but we want to target up to this 15 minutes zone. Maybe we have confidence that this order flow will push up to here. If that is the case, we have two advantages. One is risk will be reduced, and another one is reward also we get, RR. Suppose if you are taking this entire, do we get 1:3 RR? First of all, risk is not supporting. Maybe by doing position sizing, you can accept the trade. I want to take trade here. My stop loss is this blue color line. I want to do position sizing. I want to take my trade in cash segment. How to do the position sizing, you already learned in our phase 2 training course. So please refer those videos if you forgot that. Because there is no meaning in explaining all the calculations, concepts once again. It's waste of time. Okay, let us assume by doing position sizing I'm taking. So no changes. Okay, fine. So what is the next thing? RR should be there. Your checklist item is clearly telling RR should be there. You managed this risk by doing position sizing. Let us assume. You can also manage by taking deep entry. That way, risk 2% it will be reduced. That is one option. You have fear that you will be missing the trade because you have order flow, 5 minutes order flow at proximal line of 15 minutes zone. If that is the case, you do position sizing. But risk, what about risk? What is our checklist item? Checklist item 5. You should have minimum 1:3 RR. So do we have minimum 1:3 RR from here to here? Let us verify. So we are using the tool, TradingView tool, long position. Already I explained this in our training course, how to use. Okay, where is your stop loss? The blue color line. See here, now I adjusted that blue color line. This is the stop loss. So what is our stop loss value? Blue color line, 431.20. So does it have 431.15 is there? Let me add 20. Okay, now exactly the stop loss is set. So what is the entry here? Entry is 434.50. here you have entry 434.50 paisa. Okay, perfectly. Some mistake is 434.50. 434.50 is not updated. Okay, 434.50. Okay, yes. See, now exactly the entry and the stop loss is set. Then what is your target? Your target is this 15-minute zone. The 15-minute zone low, what is that? 438.60. So here your target should be, see, profit level 438.60. 438. Okay, 438.60. Now everything is set. What is the RR you got? 1:2.4 RR you got. Do you accept this trade? No, you have to reject the trade because RR is not there. If you want RR, what you have to do? Take a deep entry, adjust this, move it down until you get RR, 1:3 RR. See, now I am taking my trade in the second fine-tuned 5-minute zone, or maybe little above also I can take. Okay, now exactly. Because sometimes price may not reach this second fine-tune. Before itself, prices may move because it is a bullish trade setup. The trend may not let the prices to reach into the fine-tuned 5-minute zone. You may ask a question. The first fine-tuned zone may push the prices up. Yes, if that is the case, you will be missing the trade. Why you will be missing the trade? Because here RR is not supported. Without RR, you can't take the trade. Anyway, you have to reject the trade. Suppose if the first order flow is violated and prices reach up to this point. Now, what is my entry? My entry price is 433.05. So, when prices reach the 433.05, then only I plan my trade. Otherwise, I don't. What is the advantage I am getting by doing this? By doing this, I am getting 1:3 RR. Not only that. Now see the risk. Now calculate the risk, your entry minus your stop loss. My entry is 433.05. Earlier you got 2.2% risk you got. See, earlier you got 2.2% risk. Now let us calculate with the new entry. Instead of taking at this proximal line, now we are taking a deep entry. And here in the deep entry, your entry is 433.05 minus your stop level is 431.20. So the difference is 1.85. 1.85 into lot size is 1000, right? Yes, lot size is 1000. 1000. See, now earlier your stop loss value was around 3000 plus, right? 3000 plus earlier. Yeah, 3300 rupees earlier. Now it's reduced to 1850. And what is the lot size? What is the cost of the lot size? We calculated approximately around where is that? 1,48,600. So into 100 divided by 1,48,600. See, your risk is reduced to 1.2%. Now your risk is reduced to 1.2%. Earlier you got 2.2%. Now it is 1.2% or 1.25%. Is it within our 2% risk limit? Yes, less than 2%. That means our checklist is passed. Look into the checklist. Did you get 1:3 RR? Yes, exactly. We got 1:3. We fine-tuned. Now, what is the next checklist item? Is your maximum accepted return is less than 2%? Accepted risk? Yes. Now our maximum accepted risk is only 1.25. This is also passed. Now, is your odd enhancer score 12? Yes, in the software itself we filtered. Decision making software is taking care. This just now we achieved 1.25% risk, less than 2%, less than or equals to 2%. We achieved 1:3 RR to the entry we defined. Is the entry zone having a fresh fine-tuned 5-minute zone? Yes. It is having two fresh fine-tuned zones, but anyway we are not taking trade at the first fresh fine-tuned zone. We are taking second one. But here we have a risk. What is the risk? The first fine-tuned 5-minute zone push the market up. That way we will be missing the trade. That possibility is there. How to overcome that? That also we will discuss. First, let us focus on this. How to analyze and how to use this checklist. Without the checklist, you cannot go for the trade strictly as specified. But I don't know how many of you are strictly following this checklist. If you are strictly following checklist, please put in the comment section. At least I know who are all the people following the checklist seriously. That means you are all following all the instructions and doing the trading in a disciplined way. At least I will understand. At least my respect on you will increase. So put your comment in the comment section. All those who are using the checklist every time, each trade you are making. Each trade you are taking. Next check, is the zone having violated opposing zone? Yes, in our software itself we filtered. Is the strength of the entry zone is leg out, is sluggish? Now look into the zone. Look into the chart. Is it sluggish? No. 5-minute zones are not sluggish. Forget about 5 minutes. Our zone is, let's say, 15 minutes. 15-minute zone is not sluggish. Rally, base, rally, you have follow through candle. So zone strength is very excellent when you have follow through candles. So that way this is a very good zone supporting bullish trade setup. Okay, apart from that, okay, all the checklist items. Now one more checklist. First one. Is having less than 6 base candles? Yes. It is having only one base candle. So this is the way you can plan. This is your entry, this is your stop loss, and this is your target. You double click all the three you are getting. Your entry price is 433.05 and your target is 438.60 and your stop loss is 431.20. Please, everybody please remember, whatever analysis I am doing, these are all for education purpose. Because I have to provide my disclaimer. These are not the recommendations. Please understand. This is only for study purpose. Because I am not a SEBI registered analyst, I am not supposed to give you any recommendations. That's why I am providing you the training. How best you can make use of all these reports. Please understand, you must take any advices if you want to take. You should take from your financial planners, not from me. I am only sharing my knowledge on demand and supply zones. Okay, now this is how you will be planning your trades. That's it. Okay, now next question. What is that? There are higher chances the price may not reach up to the fine tune because we have a fine tuned 5-minute zone. Maybe if the order flow is very strong, again it will push the market up. If you have such kind of questions in our mind, then the option is you have to compromise at some extent. What is the meaning of compromising? Rather than taking your trade at this stop loss, keeping at this blue color line, and rather than taking the trade at this fine-tuned area, you will be taking your trade exactly at the distal line of this zone. But what about your stop loss? Your stop loss is below this 5-minute zone. So because it is a 5 minutes level trade, obviously you should look for your stop buffer value is 5 minute stop buffer, that is 0.46. That is equivalent to 0.5, the rounded value. So 50 paisa. Okay, if it is 50 paisa, what you have to do? The low of this, what is the low? 433.75. $433.75 is your distal line minus stop buffer value 0.5, 50 paisa. So 433.25 should be your stop loss. 433.25. Sorry. So almost exactly that is the same here. 433 stop buffer, it should be 25. Okay. See 433.25 and this is the entry and this is not changed. And are we achieving 1:3 RR? Yes. We have 1:3.38 RR is there till your target. But what is the problem here? Maybe sometimes your stop loss, your trade will be stopped out, then it will go below the order flow and again it will move up. If that is the case, you have to again plan your trade on the second fine-tuned 5 minute zone. You have to plan your trade. This is, but you don't have any other options available because the risk point of view, you are adjusting your entries. You take your trade in the 5 minutes, but you keep your target because this order flow is part of the 15 minute zone. If it is a strong order flow, it will push the market up to this 15 minutes target zone. High liquidity zones, we have more confidence will be there because the order flows are much stronger. If it is a normal demand zone, you should completely believe on your trend. Trend only should save your trades because we are planning in favor of the trend. But remember, definitely at some point trend changes will take place. When we never know when trend will be changing. One day trend will be changing, you have to accept. On that day, whatever the trades you take, they will be stopped out. You have to accept that because we can't predict. Tomorrow trend will change or day after tomorrow trend will change. You cannot predict like that. You know only once the trend is changed, then only we know trend is changed. Until then, you will be planning your trades according to the trend. Okay. But remember, this is the 15 minutes entry zone. If this zone is violated, entire this zone, your trend will not be changed. When trend will be changed, your ITF zone is violated, then trend will be changed. So that is the reason why another care you have to take after drawing the zone, go to the ITF time frame. 15 minutes is your LTF, lower time frame, that is entry time frame. So what is ITF? Above 15 minutes, next time frame is 75 minutes. So go to the 75 minutes. Is there any 75 minute zone here? Yes. You have a drop, 2 base candles and a rally. You draw the zone. Light color I have given so that these zones will be visible to you. See, this is 75 minute zone. This 75 minute zone, this 15 minutes zone is there. Zone confluence. Inside 15, you have 5 minute zones. That's why these 5 minute zones are much powerful. Remember, if 5 minute zones are having more and more fine-tuned, if there are more and more fine-tuned zones, they have more and more power. What is more and more? See, we have 75. Inside 75, 15. Inside 15, we have 5 minutes. See, we have 3 time frames, it is fine-tuned. Suppose 4 time frames, you have a daily. Inside daily, let us assume this 75 is there. Inside 75, 15 minutes is there. Inside 15 minutes, 5 minutes zone is there. That is even much stronger order flow. That is the way we can understand. Of course, sometimes those order flows also will be violated, maybe because institutions might have cancelled the order flows. There could be several other reasons might be there. But majority of the situations, their strength will be much higher compared to the other time frames. Now, because we identified this entire 15-minute zone is part of the 75-minute zone, the 15 minutes order flow is much stronger. This is how you should understand. Now go to the daily time frame. So this is not part of the daily zone. It doesn't have daily confluence, but it is having ITF confluence. 75 minutes. And if this zone is having daily EMA, it is even much powerful concept. Let us check whether it is having EMA confluence. Yes. Look into this 75-minute zone. This entire thing is 75. The 75-minute zone is having daily EMA confluence. So it is much powerful. But here you have a danger. What is the danger? Suppose if there is any one more 15-minute zone below. If this 15-minute zone is violated, the next 15-minute zone may execute the orders. That possibility is also there. So that's why go to the 15 minutes time frame. Inside the 75, any other 15-minute zone is available? Yes, there is one more 15-minute zone is available. Just below, we have a drop base rally, but only concern is this rally candle is not very great leg out. But okay, we can consider. If you make it type 2 proximal, this is somewhat better, the look wise. But anyway, inside 15 minutes order flow should be there. Then only this will be having strength. Now go to the 5 minutes time frame. Is it having any order flow, proper order flow? Yes. We have a drop, you have a base, and you have a rally. See here. You have a drop base, rally is there, follow through candle is there. So that means there are sometimes this 15 minutes order flow might be violated and then it will pick up and again it will move. So we should be very careful. But here if this 15 minute zone is violated, what will happen? This 15 minutes trend will be changed to sideways. At the time sideways trade setup will be activated. That way this will push the prices up. See, this is how institutions cleverly they keep the order flows. We will be thinking this is violated. Why it didn't work? The reason is institutions set some traps. Traps means it is not the trap concept what you learn. They want to trap your institutions. To trap us, we are retail traders. They don't want us to involve in their order flows. That's why they want to trap us. The moment they trap us, they get the liquidity from us. Suppose this zone is violated. Immediately what you do, you exit your trade. The moment you exit, they capture all over. They will be keep on buying. Why you will exit? Because your stop loss is hit. That way they get the liquidity. See, that's why they cleverly they kept the order flow here. And you will be thinking, my zone is violated. What is the reason? This is the software has given bullish trade setup. My trade is stopped out. That way you will be thinking. But if you would have analyzed this, did this analysis, you might have identified one more 15-minute zone below this. There are chances that institutions may trap us. If that is the case, what you do? In case if it is violated, anyway it will hit your stop loss, you will exit. Next time prices enter in the zone, you take another trade. maybe this trade will push the market up. Whatever the loss you got, everything you would have recovered in this new trade. That's why as a trader, always you should be optimistic. You should look for the new opportunities. When your trade is stopped out, you have to accept it. Losing some money is part of the game. Because you are not losing big money, right? You are losing within your risk management. That's why we did some calculations earlier. See, earlier we got how much percentage? We got 3.3%. Did you accept this 3.3%? No. We managed the risk, took a deep entry, and then reduced the risk and made the risk to how much percentage after that? From 3.3% it came down to 2.2%. Sorry. Earlier 2.2%. From 2.2% it has come down to 1.3 or something was there. Yeah, 1.2%. So this is 1.2%. Earlier it was a 2.2. That means 1% risk you reduced. Now we are within the maximum accepted risk. Even if you lose this 1.2% capital, if our stop loss is hit, that is okay. It doesn't impact much on our capital. Still you will be able to take the second trade, the next 15 minute zone. But this time it is a sideways trade setup. You are yet to learn sideways trade setup, but sideways trade also you can take the long trades. At least it will reach to the next target, and at least whatever the loss you would have got here, you will recover here. Suppose everything goes in our favor. Prices will go up and you get the maximum profit. All of you please remember, bullish and bearish trade setups, you can't expect 80% success rate like what you are expecting for daily and 75 minutes high liquidity zone. Definitely you won't, you can't get. See, HLQ zone strategy is an extremely a very good strategy that is helping us to get very good intraday profits. For the last 15 months, we've been seeing consistently around 80% or a little above 80% success rate we are getting. Up to 83 or 85% success rate. You can't expect same statistics for the other strategies. The bullish or bearish trade setups, you may get a success rate between 45 to 55% level. You may ask a question, what is the use if how almost half of the trades are stopped out? The beauty of supply demand zone concept is even 50% stopped out, still you will be in profits. Why? Because you are taking 1:3 RR. If 50% is stopped out in 1:3 RR, that means 3 times profit. Maybe one time will be going away, and still you will be getting another 2 times profit. Why we are removing one time? Because let us assume that 50% stopped out. Whatever stop losses we are deducting. One trade is stopped out, it is equivalent to 2 trades are successful. Something like that you need to understand. Of course, single trade only 3 times profit we are getting. Out of the 3 times profit, 1 time is for the risk. One risk is equivalent to 3 times profit. If one trade is stopped out, another trade is successful. In the successful trade, you got 3 times profit. Remove 1 time profit that you got loss in the earlier trade. Still you are having another 2 times profit. That way always you will be in good profits. So that is the reason why even 45 or 50% is a very good for supply demand zone risk management point of view. They are very good statistics. Even if you get 40% success rate is also, always you will be in profits. 80% success rate is extraordinary. That you can't compare with any other thing. That is possible only with HLQ zone strategy. But that is only intraday strategy. That you learned in lesson 21.3. Such kind of success rate you cannot expect for bullish and bearish trade setup. The day when your trade is stopped out, you have to accept that. With happiness, you have to accept. Why happiness? Because you have to feel, okay, my trade is stopped out. I lost only a small money. I did not lose big money. Big money, who will be losing? People who don't follow these strict rules. They don't have proper risk management. They don't follow stop loss concepts. But we supply demand zone traders strictly follow all these concepts. That's why even if you lose money, you should be happy. Happy for not losing big money. Okay, anyway, when you get profit, that day you will have so much happiness. That is okay. Because some people, I have seen some people, they disturb themselves for getting small losses. That is part of the game. That is what you have to accept. See how we managed this, how we analyzed this. So once you analyze, you add that analyzed stock into your watch list. Maybe here, let me say my watch list is DIT. Added them into this. Same analysis, you do it for the other stocks also. Anyway, I will be showing you more stocks. So what is the next stock? Bharti Airtel. And moreover, Bharti Airtel is a high liquidity zone. Of course, earth industry is also high liquidity zone. But this is a low priority high liquidity zone. This is the high priority high liquidity zone. That is the reason why it is already tested 2 times. 2 rejections from this zone. 2 times it is already tested. But this one is a fresh zone. Because it is a high liquidity zone, multiple times it is working. That means this stock already earlier, previously this stock was listed in our software. You would have already got the trade. When you got the trade, let us see by analyzing this stock. Because every day we are generating these reports. Probably every day Bharti Airtel might have been displayed. And once you might have already got this stock. After getting first trade, it might have reached the target. How much profit you would have got in the earlier trade, that we will see. So when is this? This is on 23rd January at 13:45. After that, 6 base candles it is having. Bharti Airtel, 23rd January. At what time? 23rd January, 13:45. See, this is the drop candle. You have 1, 2, 3, 4, 5. Medium size candle is also part of the base. Now drop base rally. So this is the highest wick. And the lowest wick is, I think this drop candle is having lowest wick. Sorry, this is the drop. Yeah. See, this is the drop. And 1, 2, 3, 4, 5, 6. The highest wick should be here. Legging you should not use wick. Only distal line only if it is a drop candle. Okay. So this is where you have drawn your zone. Let 15-minute zone. Let me give 75 minutes demand zone color. Okay, this is a 15-minute zone. This is how our software identified the demand zone. So what about supply zone? Because that is the target, right? So supply zone is on 24th January at 12 o'clock. 1 base candle. January. This is the one. Here there is no proper structures. Maybe this is not a leg out according to the software point of view. It is a medium size candle. Otherwise, it would have selected drop, 2 base candles and drop. Software considered this is a medium size. So this one is a drop, base, drop. Remember, software calculations are much accurate than human way of identifying. The only problem with software is boundary conditions. There is a concept called boundary conditions, the edge. That edge level, sometimes software's decision making will fail. But they are the rare situations. Okay, this is the supply zone. See, we got a very big, huge reward. Okay. So what are the rules if you want to take a trade here? It should have a fine-tuned 5-minute zone should be available. Go to the 5 minutes time frame. It looks like it doesn't have any fine-tuned 5-minute zone, right? A fresh zone. But have you noticed here this drop base rally? This is acting as a high liquidity zone. That means you should have either a fresh fine-tuned 5-minute zone or the 5-minute zone could be a high liquidity zone. Either one is okay. See here, this zone is supporting bullish trade setup. Previously, this zone might have been, see, when this 15-minute zone was completed, first we will see. This is the 15-minute zone completed. Probably our software might have listed this earlier. See, after that price has entered into the zone, went to this fine-tuned 5-minute zone, the high liquidity zone, 5-minute zone, and from this it picked up the orders and again it started moving up. Very good profit it has given. So this is the one already tested. That is what our report is showing. The Bharti Airtel is already tested. Why it is showing 2 rejections? Because the 2 candles moved away from the zone. This is one candle and this is another candle. No. This is the leg out, sorry. This is the first candle moved away from the zone and this is the second candle again moved away from the zone. But the real order flow is from this zone. Here you would have taken a trade here. After that it gave very big move. At the time the target could have been this one, drop base drop. See here. You got the trade and it reached the target. Definitely this is, you will get 1:5 RR or 6 RR you will get. No issues. Risk management is also small when you are taking trade in the fine-tuned 5 minutes. And RR also you get. All are in your favor. And more importantly, this 15-minute zone, is it there inside the 75 or not? We will check. Yes. It is also part of the 75-minute zone. How? Drop, base, rally. That means same 15-minute zone, exactly the same thing is also a 75-minute zone. So that means 15-minute zone is having confluence with 75-minute zone. Whether is it having any daily zone confluence, let us check. No, there is no daily zone confluence. Fine, that is okay. But more importantly, it is a high liquidity zone. This 15-minute zone is a high liquidity zone identified by our software. How it identified? While it is a fresh zone itself, our software identified it as a high liquidity zone. So far it is tested only once, but 2 rejections were there. So this is the power of the high liquidity zones. Okay, next time can we plan a trade? Maybe in the fine-tuned 5-minute zone. But remember, you never know when these 5 minutes high liquidity zones will be violated. It may support multiple times, but it is also get some expiry period. The day when it is violated, if that was your first trade, you should not disappoint. You have to accept. If it is a fresh zone, always you feel happy when it gets the success. Later on, you don't mind even second trade or third trade if it violated, if it is a high liquidity zone, 5 minutes zone. You don't mind, because earlier you already got the profits. But if your first entry itself it is violated, definitely you will have some disappointment, but that is okay. The reason is our risk, we are managing the risk. Whatever the loss we get, that is a very small one. Okay. So this is how you will be analyzing. Bharti Airtel, how we analyzed. And moreover, this is having any daily EMA confluence, that also we will see. Daily time frame. No, it is not having daily EMA confluence. Only zone confluence is available for Bharti Airtel. But only thing is that was a high liquidity zone. Similar kind of analysis, you have to do it for the other stocks also. Okay, what is the next stock? Next one is KEI. This is also a high liquidity zone. And when this zone was created on 22nd January at 15 hours, after that one base candle. Adding this into watch list. Next one, KEI Industries. KEI Industries, 22nd January. This is the one, 15 hours. Maybe it is a failed ERC candle. Software considered. And this is the base candle and rally candle. So this is how we draw. This is the 15 minutes demand zone. Drop, base, rally. This drop, failed ERC is the drop, base, rally. See, our software also specified here DBR, drop, base, rally. A fresh zone so far. Okay, is this zone part of the 75-minute zone? Let's verify. Yes, this rally, base, rally, this is the 75-minute zone. Let's draw this zone. So this is the 75 minutes demand zone. Inside 75 we have 15 minutes zone. Is it inside daily? Mostly not, because only one candle is there. Daily may not be visible, but we will check. So daily candle. But have you noticed there is a concept I explained, another way of drawing zones. You have a rally candle, another rally candle, higher wick of this candle and lower wick of this candle. mostly the order flows are very strong. So such kind of concept you are seeing in this stock. 2 daily candles. In between you have 75 minutes zone is there. And within this 75 minutes we have 15 minutes fine-tuned zone. This is one identified by our software. And this is having again inside fine-tuned 5-minute zone is there because our checklist. Yes. We have a drop-based rally. Because the risk is very small. If your risk is high, type 2 proximal you take. What is that? Okay. This is how you draw. Demand zone, fine-tuned zone. But if you feel risk is very small here, there are higher chances taking type 1 proximal entry trade and it will move. If you feel, draw the zone like this. What is the low of this lagging candle? Low is 4102 10 paisa. This candle low 4101 75 paisa. 4101. This low 4102 10 paisa. So that means you have to draw your zone up to here, because the leg out is having lowest wick. Okay. So drop base rally. So this is your entry. What about our target? That we forgot. So what our software is saying? KEI is having a supply zone 24 January at 13 hours. January at this is 14, 13:30. So this is the one. Drop base drop. You can also consider this drop base drop. Maybe software did not consider this leg out, but whatever it is, this is also valid. Maybe this is a doubtful because it is a medium size leg, clearly. Okay, anyway, we have enough RR is there from here to here. Probably you have up to 1:5 RR might be there, or even more. But remember, here one important thing you should understand. This is now you are analyzing the stock, but by the time prices reach, now it may create another. Already you have a medium size candle. This is the leg in. You have 3 base candles. Tomorrow maybe a leg out will be created, big leg out. Now immediately your target will be changed to this. Now you have to plan your target like this because of this new leg out. And at the time, before taking the trade, do we have from here to here minimum 1:3 is there or not? You need to check. If that does not qualify 1:3 RR, either you have to take a deep entry to manage the RR, or you need to reject the trade. Either one of the decisions you have to take. Without RR, you should not take the trade. Always remember. So these are the few important points you should understand. When supply zones are newly created, supply zones are very close to the zone, there are higher chances the newly created supply zone consumes all the order flow and zone might be violated. That possibility is also there. So that's why you should be very careful. But meanwhile, we didn't check whether this is having daily EMA confluence. So I'm moving to the daily time frame. No, this is not having any daily EMA confluence. Okay. So KEI, this is KEI. Definitely risk will be within your manage level because it is a small zone. How I calculated the risk earlier, do the same thing. Is it within 2% level? You need to check after adding stop buffer. Because every day our reports, our software generated reports, the last 2 minutes or 3 minutes in the video, the last 2 minutes or 3 minutes, I am generating stop buffers. Please refer at the ending of the video. Whatever the stop buffers I shown, I am generating every day in the video. So use the values and that way you can plan your trades. Okay, the next one is a Maruti. This is also a high liquidity 15-minute zone, fresh zone. When it was created on 14th January, 14:30 hours after the 3 base candles. 14 January, 14:30. So Maruti. Okay, this is the earlier analysis, HLQ zone analysis videos. So the fine-tuned zones, how it is working Maruti. This one I'm removing. These are some target zones, 15 minutes time frame. Anyway, I'm not removing this analysis, I'm still keeping. 14th January. This is 21st January. This is 14th January. 14th January, what time? 14:30. This is the leg in rally, 3 base candles and a rally candle. So this is the 15 minutes demand zone. See, prices are not very near, they are far away. Unless there is a crash tomorrow, prices, it's not easy. But before it come down, there is a pro gap is there. It has to consume all the orders in the pro gap, then only it will reach. So that's why sometimes the zones you analyze may not be reaching immediately the prices. This is one classic example. Okay, where is the supply zone? Supply zone is also a high liquidity zone. See how powerful it is? Already tested 9 times, 25 rejections from this zone. Prices came out of the zone, went to the zone, came out. This is 15-1, 9-15, 5 base candles. So this is the one. Actually, this is the origin. We have origin, but if you look into the 15-minute zones point of view, the zone is a very big zone. This is a high liquidity zone. See, prices came and again went to the zone, came down, again went to the zone. From the origin, the 5-minute zone is the origin here, a fine-tuned 5-minute zone. Of course, also 15-minute zone is also here. This is the one from here it picked up and again came down. Now again a new zone is created. Previously I think we took some trades from this area. This is again a 5-minute horizon to this entire 15-minute zone. It gave one trade and again it gave another trade. All these horizons are powerful trades, powerfuls, very powerful. So this should be our target. This is our entry and this is our target. But there is a possibility. Before prices are reaching this, it may create a new supply zone and again it will push the prices. That new 15-minute supply zone should be your target. This is as on today, you are analyzing, you got a very good target, you got a very good RR. But by the time prices reaches here, a new supply zone will be created somewhere in the middle. Till that new supply zone from this demand zone, you may not be having enough RR. That's why always you have to revise your analysis. It's very, very important. The day when you analyze may not be same as the day when prices are entering into your zone. Today I am analyzing the stock. Maybe after 1 week the prices may come here. After that we take the trade. Remember, all these zones are valid as long as a trend does not change. And risk management is within our limit. You have a minimum 1:3 RR. When these factors are satisfied, this zone is valid even after 1 week. Only HLQ zone strategy concepts, those 75 daily, we use them only in the next trading session. You can't apply that rule to these bullish and bearish trade setups. Bullish and bearish trade setups, today's identified stock, even you can use after 1 week or after 10 days, provide the trend, price direction, they're all in your favor. If any of those things are changed, your analysis will be changed. If RR is not there, your analysis will be changed. Today you have RR, but by the time prices comes here, maybe near to the zone, a new supply zone might be created. Let us assume. Then you can't take a trade in that. Okay? But is it there inside the 75-minute zone? Yes. You have a leg in, you have 2 base candles, rally. That way you can draw the zone. This is the 75-minute zone. Is it having any daily EMA confluence? Let's check. Yes. This is having daily EMA confluence. If in case if prices come down maybe tomorrow or the next trading day, you will be very lucky. This is EMA confluence might be providing you support and it will be pushing the prices up. But the condition is this zone valid? If it is having a fine-tuned 5-minute zone, then it is valid. That we didn't verify. So let's go to the 5 minutes time frame. The structure is not really great. Lot of consolidation took place here. 1, 2, 3, 4, 5, 6, 7, 8, 9. So many. Maybe because of, you may say, maybe because of this gap, this candle sizes are changed. So let us hide that. Okay, now you got. See, this is not a failed ERC rally candle. So that means after this candle and this big candle, there are no base candles. There are higher chances this zone might be violated. There are higher chances. Even though it is having RR. Maybe, if at all it works, there is one reason is there. What is that? Lesson 22 concept. Lower time frame zone as an horizon. Here we need to take. rally, base, rally. For this 75-minute zone point of view. But 15-minute zone is not overlapped with this 5-minute zone. So that way your concepts will change. This does not comes under your bullish trade setup related stock, because this comes under lesson 22, lower time frame zone as an horizon. Entire concept will change. But bullish trade setup point of view, there are higher chances of zone failure. This is the advantage of lesson 16. That's why in the checklist, now you will understand why I kept this checklist item. This is the one, checklist item 4. Is the entry zone having a fresh fine-tuned 5-minute zone? Why we are checking this? To check whether the zone will work or there are chances for the violation. Because there is no fine-tuned 5-minute zone inside the zone, there are higher chances. 80% chances are there. Rare situation the zone will be successful. Rare situation. So we can't trust on the low probability. We always give our vote to high probability scenarios. So that way this DIT bullish trade setup we will reject, because it is not having a fresh fine-tuned 5-minute zone. We have LTF zone is there. This is for 75-minute zone. And 15-minute zone is not overlapped here. Of course, they are very close. But by the time when the trade, you want to take a trade from this horizon, 5 minutes horizon, this 15-minute zone has to be either violated or it should be pierced. See, this is how we analyzed the stocks. Okay, to save some of our analysis, what is that I am doing? From this list every day, I am further fine-tuning this, filtering these stocks based on the zone confluence. See, we already identified a few stocks, zone confluence. We haven't seen any of these stocks are having a HTF confluence. Daily zone confluence was not there, right? There were no daily zone. So let us check our software is properly filtering or not. So we can further filter this list based on LTF and ITF demand zone confluence, that is 15 minutes and 75 minutes demand zone confluence. So in the demand zone confluence, I am adding the filter 15 minutes demand zone having confluence with 75 minutes demand zone. How many of these stocks will be there supported? So all 4 stocks are having the zone confluence, ITF confluence. Is it? First we analyzed RT. Yes, RT is having a 75-minute zone confluence. See, inside the 75 we have two 15-minute zones. Bharti Airtel, yes, this is also having, see, drop, base, rally, exactly the same both, 15 minutes and 75 minutes. And KEI also having rally, base, rally. Inside we have 15-minute zone. Inside 15, 5-minute zone. And Maruti also same is the case. Here we have seen rally, 2 base candles rally. The 75. Inside we have 15. Inside 15 we don't have proper 5-minute zone. But 75 is having an origin, 5 minutes origin. That is lesson 22 concept. So software perfectly identified. Okay. And out of these 4, how many are having a daily EMA confluence? Because they are the high probability, even more high probability setup supported. So in the EMA confluence at 75 minutes time frame, because 15-minute zone is part of the 75. That's why we are looking for 75 minutes demand zone having daily EMA confluence. Two stocks we got, Aarti and Maruti, right? We already verified. Let's go again. In the daily time frame, see Maruti is having KEI not having EMA confluence. So software did not display this. Bharati also not having. So that's why our software did not display Bharati also. Aarti Industries it displayed. Look into the Aarti. See here we have a 75-minute zone. This is having EMA confluence. So this is how perfectly our software is analyzing the stocks. That way we are every time identifying the high probability setup. But you can't take the trades blindly. See here Maruti what it is displaying. Everything is in our favor, right? Maruti. But the moment you go to 5 minutes time frame, it doesn't have any fine-tuned zone. This area. By seeing the EMA confluence, everything we see, okay, this is a very good zone, we can take a trade. You take the trade, mostly it may be violated, maybe it may work, but the work chances are only 20% scenarios. 80% failure scenarios are there. That's why we don't take risk. This will fail, but below there is a LTF zone, it may work. Because LTF zone concept is a very powerful concept. Lower time frame zone as an horizon to this entire 75-minute zone. That way this 5-minute zone is powerful. Your 15 minutes trade may fail, but it will pick up the orders from this 5 minutes horizon and again it will move. That possibility is there. Institutions are very clever. They always wants to trap us. Of course, we are also clever. That's why we identified all these concepts, where exactly institutions keep their order flows. These new concepts. Lesson 22 is a new concept I developed. Okay. So software perfectly displayed the stocks. These two stocks are having 75 minutes with EMA confluence, and 5-minute zones, 15-minute zones are part of the 75-minute zone. Every day I'm filtering the stocks like this only. That is the way high probability trade setups we are identifying. Same is the case you can apply to the supply zone also. You can analyze. I will give you the list, supply zones list. That is the exercise for you. Because Saturday and Sunday you have enough time, because both days are holidays. You can analyze similar way. You can analyze supply zones. Let me give you that list. Okay, entry time frame should be 15 minutes. For a daily income trade, entry time frame 15 minutes. Now bearish trade setup, it should be supply zone. And then bullish or bearish trade setup, at entry time frame 15 minutes, I am selecting bearish. Earlier we selected bullish, now we are selecting bearish. And these 15-minute supply zones should not be pierced. That's why in the pierced count parameter, this is the pierced count parameter. Here at 15 minutes time frame, that is our entry time frame, our 15-minute supply zone should not be pierced. That's why we are setting minimum value 0, maximum value 0. That indicates pierced count is 0. Pierced count 0 means zone is not pierced. And this filter is applied to whatever we select here. We selected 15-minute supply zone. Similarly, two more filters as per our checklist. One is the zone achievement should be violated opposing zone. Minimum odd enhancer score should be 12 minimum. And these two filters, apart from pierced zone, they are applied to 15-minute supply zone. With all these three filters, we got 16 stocks. First 15 stocks you are seeing in the report. Let me scroll the list down. Now you have got total 16 stocks. Now you can analyze these 16 stocks. exactly the way how I did. Look for the zone confluence, look for the EMA confluence. And that way you find the best. Then you need to fine tune with 5 minutes zones. They are very, very important. Why? Because our checklist is clearly telling you must fine tune with 5 minutes time frame. So this is one checklist item you have to do manually. Everybody, after drawing the zones in our reports, you have to do this. Based on this only we can tell whether the zone can be violated or it will work. At least 80% scenarios. And another checklist item is your RR. Minimum 1:3 RR you have to calculate and you need to check. If it is not there, either you can do position sizing or you can do deep entry and adjust the risk. How I did first for RT Industries. The same way you can do. And next you need to see whatever the entry you are taking from that entry till the stop buffer, whether it is within your 2% risk or not, you need to check. Sorry, this is the one. Yeah, this is the one. Checklist 6. These are the 3 checklist items. 4th one also you need to verify the strength of the zone. This is also you need to check. So, out of these 8 checklist items, 4 is already taken care while filtering or inside the software. Remaining 4 you need to analyze and you need to confirm. If everything is favor, then you have to plan your trade. Hope I made it clear. Okay, how I am further filtering this? Okay, we got 16 stocks. Out of these 16, we are further filtering high probability zones. How? One is based on the high liquidity. High liquidity always adds some extra additional probability to get success. Apart from that, what else we need? Zone confluence. Why zone confluence? Because if more and more zones it is having confluence, the order flow might be much and much stronger. Because we always believe 15 minutes order flow is stronger than 5 minutes order flows. Similarly, 75 minutes order flow is stronger than 15 minutes order flows. Similarly, we believe daily order flows are stronger than 75 minutes order flows. When the time frame is going up, we believe those zones have much stronger compared to the lower time frames. If zone confluence is there, the same 5 minutes fine-tuned 5 minute zones is having, if it is inside daily, that is having a power equivalent to daily zone order flow. Even though it is a 5 minute zone, but that is a fine-tuned 5 minute zone, which is part of the daily zone. That way you have to understand. If suppose it is a fine-tuned zone inside the 75 minute zone, that order flow is equivalent to a 75 minute zone order flow, the fine-tuned zone. That's why understanding where exactly the original order flow is there is very, very important. That's why we are looking for zone confluence. That's why to check the high probability, every time what I am doing, I am checking the zone confluence. 2 zone confluences I am checking. That is what I explained in lesson 26. 26 or 27? I think 27. Lesson 27. Okay, now supply zone confluence we need to look. LTF and ITF. What is LTF? 15 minutes. What is ITF? 75 minutes. So that's why I am setting this filter. 15 minutes supply zone confluence with 75 minutes supply zone, and then further filtering the list. See, now the list is come down to 11. Earlier we got 16 stocks, right? Now it's come down to 11. That means in these 11 stocks, these 15 minute zones are part of the 75 minute zone. But that is not enough. Manually you need to check inside the 15 5 minute zone is there or not. The 5 minutes overlap is there or not. You need to check. That manually you have to do. That confirms the zone work or it might be violated. Okay. So these are all, that means 15 minutes is there part of 75. It is equivalent to the 15 minute zone is having 75 minutes order flow. But if that 75 is having daily EMA, those stocks are even much more high probability to get the success. Provide fine-tuned 5-minute zone should be there. Otherwise, the zone will be violated. Previously, you have seen Maruti is having everything in our favor, but fine-tuned 5-minute zone is not there. EMA confluence is there, zone confluence is there. Still, we don't prefer that stock. Even that was high liquidity zone also. Even then, we don't prefer, because there is no fine-tuned 5-minute zone. That is very, very important. That is a confirmation for institutional order flow. I am not saying Maruti will be violated. What I am saying, 80% chances are there for the zone violation. It's all probability game. Okay, out of these 11, how many are having again EMA confluence? Let's verify. In the EMA confluence, 75 minutes time frame, because 15-minute zone is overlapped with 75. That's why we are looking for 75 minute supply zone having daily EMA confluence or not. Because it is bearish trade setup, we are looking into the supply zones. See, 4 stocks are filtered. Probably these 4 stocks are much more high probability to get the success, provided they should satisfy all the 4 checklist items, the remaining 4, which manually we need to verify. One is strength of the zone. Second one is fine-tuned 5-minute zone is there or not, you need to verify. Third one is minimum 1:3 RR is there or not. And the fourth one is, and whatever the trade you are taking, the risk is within 2%, less than or equals to 2% or not, you need to check the risk of that particular zone. Otherwise, you have to follow techniques to manage the risk. See, these 4. But they are based on LTF and ITF zone confluence and ITF EMA confluence. Similarly, we need to look for LTF, ITF and even HTF also. After that, HTF EMA confluence. So how we do? This ITF we have to EMA filter we have to remove, because now we are looking for HTF zones and HTF confluence. So now scroll down, go to the supply zone confluence. Here 3 filters we have to set: LTF, ITF, HTF, zone confluence filter, supply zone confluence filters. Already we set the first filter, LTF and ITF supply zone confluence, already we set. So remaining 2 filters, what is that? Next one is ITF and HTF supply zone confluence, that is 15 minutes and daily. And third filter is, this is LTF and HTF. Third filter is ITF and HTF. ITF is 75, HTF is daily confluence. So we set 3 filters. And all the 3 filters ensure LTF, ITF, HTF confluence is available. That means 15 minutes, 75 minutes and daily zone confluence. If any of those stocks are having, those stocks only it will display. See, now 6 stocks it filtered. Earlier original list we got 16 stocks. From that 11 stocks are having LTF and ITF confluence. And out of the 11, now these 6 stocks are having LTF, ITF and HTF zone confluence. What does it mean? This entry time frame 15-minute zone is part of the 75-minute zone. Both together part of the daily zone. And these daily zones out of 6, all the stocks are having downtrend except 4th one. EMA confluence, if you want to verify, sideways trend EMA does not add any extra advantage. If you really want more power for your zones, the trend should be either uptrend or downtrend. Because it is bearish trade setup, trend is downtrend in all the HTF except the 4th one. So except the 4th one, the remaining stocks, if any of these HTF zone, that is a daily zone, HTF is daily, it is having daily EMA, that is even more high probability setup stock. Let us verify. In the EMA confluence at daily. Why daily? Because the entry time frame 15-minute zone is part of the 75-minute zone, ITF zone. Both together again part of the daily zone. That's why we are looking for daily demand zone. This is supply zone. Daily supply zone having daily EMA confluence. See, 4 stocks are filtered. Out of these 4, you ignore the second one, sideways trend. I can also filter in our, see here in the trend at a daily time frame, I am selecting only downtrend. Now we will get only 3 stocks. The sideways trend, it is eliminated. So in these 3 stocks, you need to look for the stocks. See, the Tata Elxsi is having high liquidity zone. Let us check whether this is, at least I will analyze one stock so that I can also show you example for LTF, ITF, HTF zone confluence and also EMA confluence. So in the 15 minutes time frame, because these are all entry time frame zones are 15 minute zones. So because it is a bearish trade setup, your trade plan should be on the short trades. Okay, Tata Elxsi, when is the supply zone? Leg in. This is on 9th January 14-15. After that 4 base candles. Maybe somewhere here, yes. 9th January 14-15. This is a drop candle. If I hide this gap, you will really understand. See? This is a drop candle. You have 1, 2, 3, 4 base candles. This is how our software identified. So this is a 15-minute supply zone. See, already once it is tested. When it happened on 23rd January, that means this stock would have been already displayed earlier. See here, rally base, rally is there, it reached the target. Tested and then reached this target. Now again this demand zone is pushing the prices. Now what is the latest demand zone? 24-1, 10-15. This is the target. 24-1, 10-15. 2 base candles. 24-1, 10-15. 2 base candles. It is like almost like a LOTL zone. See this rally base rally. RBR, rally base rally. This should be the new target now. And from here to here, RR is there or not, you need to calculate. This is the work you have to do. I already gave one example. Rest everything you have to practice. Okay, most importantly, is it having a fine-tuned 5-minute zone? That is important. Let's go and identify first fine-tuned 5-minute zone. Is there or not? Yes. Here we have a rally candle, 3 base candles, and then drop candle. That way you can treat. And type 3, type 2 proximal entry for planning our trade in case if the risk is high. Generally, where you take your entry? At the supply zone. The 15-minute supply zone, proximal, you take entry. If the risk is bigger, you will fine-tune to type 2 proximal or fine-tuned zone. Either way, you have different techniques you can use for taking the entry. See, earlier just touched the proximal line and then price reached the target. Let us assume you want to take a trade in this fine-tuned area. Did you miss this trade? Yes or no? That's why what I am suggesting, only intraday trades only you have to take trades in the fine-tuned area. For the remaining trades, you have to take, always you have to give first priority to type 1 proximal because the trend is very strong. They are pushing the prices. Especially overall market trend is downtrend. Price may not reach up to fine-tuned area. But the thing is, if you really want to take a trade in the type 1 proximal, the risk RR should support and the risk should be within the 2% limit. If it is beyond, either you have to do position sizing, or if you want to take a trade in F&O, again you have to take a deep entry, you will be missing the trade. See how many points, so many points you should consider to take a best decision. Your decision making is very, very important. See, it has given a very good profit. Now you will be getting one more opportunity, and this time maybe prices may enter into the fine-tuned area, or a little before again it will come. Why? Because the Tata Elxsi is a high liquidity zone. This is a high liquidity supply zone. And moreover, it is having a LTF, ITF, HTF confluence. See here, this is having 4 fine-tuned zones. 5 minutes is part of, already we have done. 5 minutes is part of the 15 minutes zone. Our software already informed 15 minutes is part of the 75 and 75 is part of the daily zone. Let's verify, let's go. Now I am shifting to 75 minutes. Is there any 75 minute zone available here? Yes. How? We have a drop candle, 2 base candles, and again a drop candle with hidden body. This is the way I can draw. So this is the 75 minutes supply zone. See, 5 minute supply zone, which is inside 15 minute supply zone, which is inside 75. Our software also said this entire thing is inside the daily zone. Now I'm changing to the daily time frame. Yes. We have a drop candle, 3 base candles, and again a drop with hidden body. This is a big drop candle. This is the daily zone. So this is the daily supply zone. See, the daily supply zone we have 75. This is the 75. Inside the 75 we have 15 minutes. So this is the 15 minutes. Drop 4 base candles, drop. Inside the 15 minutes we have 5 minutes fine-tuned zone. This 5 minute zone confirmed there is an institutional order flow. But do you want to take a trade at the 5 minutes fine-tuned 5 minute zone, or before that? That is up to your risk management. Okay, but one more thing we are yet to verify. What is one more thing? The daily zone is having daily EMA confluence or not, because our software said this daily zone is also having daily EMA confluence. See here in the search criteria, EMA confluence, and daily zone, daily supply zone having daily EMA confluence. So in the chart I am going to the daily time frame. See here, the daily zone is having daily EMA. The blue color line is the EMA. This is having the EMA confluence. That's why earlier see prices entered and then came back and reached the 15 minutes target demand zone. How nicely this concept worked. Tata Elxsi, maybe if you would have looked into the Tata Elxsi day before yesterday also, it might have listed in our software. And yesterday it has given. Yesterday means Thursday it gave a trade. And yesterday, that is Friday, it reached the target. That is what DIT trades. Go to the 15 minutes, you will understand. See, we got the trade on the 15 minutes demand zone. That is Thursday at 13:45 it reached. And yesterday it reached the target. Yesterday again at 10:15 it reached the demand zone. Do you know how much profit, in case if you would have taken, how much profit it would have given? What was your entry supposed to be actually? 6425. It is just a motivation. By calculating these statistics, we will understand the power of the software. And this is our target. What is the target? 6294. $6,294.70. You got 130 rupees profit you got in 2 trading sessions. First trading day, you got the entry on Thursday, that is on 23rd January 2025, and 24th January 2025 it reached the target, because it is a daily DIT trade. You will get within 5 days or 3 to 5 days it will reach. Sometimes during intraday itself it will reach the target, sometimes next day it will reach, sometimes after 3 or 4 days it will reach, because the DIT trades are short-term trading. One stock you would have got 130 rupees. Let's see, suppose if you would have taken in the future, how much profit you would have got. Let us calculate a rough calculation. Stock exchange, futures, product, futures. Your symbol is Tata LXE. Say let us take January futures, January 2025 futures, and this is a short trade. And what is the future lot size is 100. So into 100, you got 13,000 rupees profit in just 2 trading sessions. And what is the margin cost? 1,30,000. For the current closing price, this is the margin cost. So when prices were there, it will increase some more, probably another 500 rupees or 400 rupees more it might be there, approximately I am telling. So this is a 1,08,000, maybe another say 400, or let me say 1,09,000. So into 100 divided by 1,09,000. You got 11 point. That means 12% ROI you got. 12% ROI in 2 days. That means each day it's like you are getting 6% each day. Excellent, right? So this is the power of these high probability setups. Sometimes these high probability setups also will fail. Why it will fail? Because I told you there are multiple trade setups might be there. Suppose if this is violated, see here, is there any more 15-minute zone available here? Let me hide this candle. You have a rally base drop is there, but is it a great leg out? Somewhat doubtful, but still let us drop. So this is a 75-minute zone. This is the 15 minutes zone, supply zone. We are in the 15 minutes time frame. If this 15 minutes zone is violated, we have one more. But is it having a fine-tuned 5 minutes? Let's go to the 5 minutes. So it's not really, but here you have a drop base, a drop, failed ERC as a leg out. You can consider. Lesson 22 concept. Lower time frame zone as an horizon to the higher time frame zone. That way you can consider, or this is also possible. Actually, this is even much perfect, because almost exactly at the digital line we have a drop, base, drop, and this 5-minute zone is the origin for this entire 75. Of course, from here only it picked up the orders. What is the high of this candle? The high of this candle is 6504.45, and this high 6504.40 paisa. That means 5 paisa is outside the zone. Most probably this zone may give. You may ask a question, why I didn't select here? Not really, because of course a drop base drop is there, but it picked up the orders from this horizon only. This is the right place to plan your trades, because this is the origin. From this origin it picked up the orders and entire zone formation is formed. So next time you can plan a trade, provide this 5-minute zone is violated, this 15-minute zone is violated, you can look into this 15-minute zone. Why? Because your trend will be changed only if 75-minute zone is violated. The 75-minute zone is having 2 order flows. Sometimes what happens, this order flow will be violated. You will be thinking that software gave a report and it is violated, but actually a little above there is one more 15 minutes order flow. From here prices will come and then it will come down. So that's why you have to do this analysis. Same thing I explained in lesson 28. Lesson 28 I explained these strategies. While explaining these strategies, everything I explained. And these kind of issues also I explained in lesson 28. So it's very important. Lesson 28? Lesson 27. Lesson 28 is about pierced zones, right? Yeah, lesson 27, I'm sorry. Lesson 27 I explained these bullish trade setup strategies. Based on the zone confluence, EMA confluence, all the strategies I explained. At the time I explained this scenario also. When your ITF zone is having multiple order flows, see, this is the first order flow. Our software always gives you the nearest order flow to the price. And this is the another order flow. But this order flow, this 15-minute zone, does it work? There are higher chances it will work. Already it worked. It gave one test. Why higher chances? The reason is this 15-minute zone is also a high liquidity zone. See here, it's a high liquidity zone. So that is the reason why there are higher chances. If this is violated, there is one more order flow is also there. If that is also violated, then the trend will be changed to sideways. Before that, you have these trade opportunities. So this is how you should understand these concepts. Maybe it's a very big lesson, but those who wants to effectively use our software reports, you must go through all these, whatever I am explaining, everything you must listen. Otherwise, there is no other option for you to become a very good trader. Hope this information will be useful to you. Whatever the exercises I have given, please complete them. Practice. Become good traders. Ultimately, that is what I am expecting from all of you. Okay. So this is about today's lesson. Hope this information will be useful to you. Let's all meet again in our next lesson. Thank you.